Welcome back, traders. Welcome back. This is Peeps of Africa here. So I'm back in the building. So now let's quickly check gold here according to weekly time frame. Let's quickly check the gold according to weekly time frame. Welcome back, everyone. I see you. So let's quickly check this thing and see what is happening according to weekly time frame. So if you were to mark up the structure according to gold, let's start off like this with marking of course, the structure. If there's, you can clearly see that we are on an uptrend from this low up until this high here. All right, so let's quickly mark up the structure. Here we had your higher low, higher high, higher low, higher high according to weekly, higher low, higher high, higher low, higher high, right here higher high, and also this higher low. This is just the lower highs and lower high and lower lows for minor structures. But this one is just a pullback. So now, if you can check here, well, I'm just checking the structure. We now see that we are on the bullish market, so the structure is bullish. So now we're only looking for buys, not sells. You must trust the bigger time frames than smaller time frames. You must always trust the bigger time frames. I always start my analysis on weekly time frame, then go down to daily time frame, from daily to 4 hour, from 4 hour to 1 hour, from 1 hour to 15 minutes or 30 minutes, then from 15 minutes to 5 minutes. So I usually go to 5 minutes and 15 for my entries, and for of course reasonable stop losses. Okay, so now let's quickly start our analysis. So the first thing that we must do, you must start off marking the structure and see if the structure is trending up or to the downside. So now we know that we are bullish on gold according to weekly time frame. Let's go down to daily time frame. So on the daily time frame, so what I'm trying to teach you is this. On the weekly time frame, you're only looking for a structure, nothing else. On the weekly time frame, you're only looking for a structure most of the time. You can check some other blocks from weekly time frame, but most of the time, what I like to look at is the structure. That if we're on the uptrend, I'm looking for buys only. If we're on the downtrend, I'm looking for sells only. So let's quickly see what is happening according to the daily time frame. So on the daily time frame, I'm looking for three things. I'm looking for liquidity zones, order blocks, Wyckoff schematic, and then the manipulations. If the manipulation is there, I'm looking for manipulations, Wyckoff schematic, and then order block, and then institutional candlestick. So that's what I'm looking for on the daily time frame. So let's quickly look at those things and see what is happening according to daily time frame on gold. So what I see on gold, as I told you guys, that on daily time frame, I'm looking for manipulations or liquidity, equal highs and equal lows, double bottoms and double tops. The second thing that I'm looking for is order blocks. The third thing, which is the last thing, is what? Is the Wyckoff schematic on daily time frame. If there was a Wyckoff schematic, the price has to go back there and respect and try to mitigate some order blocks there before shooting to the upside, because we saw that the structure is trending to the upside on the weekly time frame. So now let's quickly check if there are some equal lows or equal highs. What I see here, I also see the equal lows somewhere here. Meaning, you must not buy somewhere here, even if you see an order block. Like here, I see an order block somewhere here. Unless if you are scalping, but it is very dangerous. You see there's liquidity somewhere here. Retail traders, they trade based on trend line support and resistance. That's nonsense. It doesn't make those things, because if you're trading, if you're using support and resistance, most of the time you will lose money most of the time. And then also your stop loss will always be big. If you're trading based on support and resistance. Your stop loss will be bad. Risk to reward will be very bad. Meaning if you lose, you can lose the whole capital if you are trading based on support and resistance. You must trade in the same way as market makers trade. Okay, so now let's quickly mark up the equal lows so that we see what is happening here. This is what I see according to daily time frame on gold. Equal lows, as you can see them, they are very clear. Equal lows, now let me try to label this one. This is liquidity. I label it as liquidity. Now the price has to shoot to the upside collecting this liquidity because the market makers, they need a lot of funds to move the market. They need funds, they need a lot of money to move what? To move the market. So let me quickly check on this side. So every time when you see equal lows, as you see them here, let me try to put it like this. You see, if you see the equal lows like here, you must check on your left-hand side here. If there is an order block, there must be an order block below the equal lows. Let's quickly check if there's no order block there. Let's quickly check if there's an order block or not. Let me try to use this trend line here, so that I won't keep scrolling this thing, the charts, okay? All right. Now this is what I see according to daily time frame. So even here I see the liquidity. Let me get rid of this trend line and mark this liquidity here and see what is happening. From this point to this point, you can see, guys, this thing is clear. Even here, sorry. Let me try to label this one once again as liquidity. To the bottom. All right, so let me try to look it up. Now let's check, as I told you that most of the time you will see something like this. You will see the price moving down like this, moving up like this, moving back down, moving back up like this, creating the liquidity. As I showed you there, creating the liquidity here. Now the price will do something like this. There will be an order block here below the liquidity. The price will start by creating an order block and then move the price to the upside, move it back up, move it back down, creating the double bottom, move it back up like this. You see? And then they will try to move it to the backward, taking the liquidity that is here. The price will come back, tapping into the 50% of this order block that is underneath the liquidity. So the price will come back here. So retail traders, they will think that this one is lower low. Actually, this one is not lower low, but this one is this big move to the downside is here to manipulate the equal moves. Also to mitigate these order blocks here, these orders here. Before we see this big push to the upside, breaking the structure here, meaning even here there will be an order block somewhere here. So the price, they have to move the price back here. So those who are suffering from FOMO, which is fear of missing out, who bought here and here and here, those who are suffering from FOMO, this move that is coming back here, it will take them out. This move is coming there, they will start selling once again, selling. But this move is actually coming here to respect this order block before continuing with the move to the upside. This is what is going to happen most of the time. Let me try to erase all these things, the rows. All right, so now what I'm going to do, I'm going to show you how to trade, if you see how to trade based on equal lows or equal highs. So now we're going to check if there is a double bottom. I mean, if there is an order block below that, below the equal high, equal lows. You see, these are equal lows here. But underneath, they will always, these guys, they will always leave an order block. Start by creating another block and then consolidate, creating equal lows, and then they push the price to the upside. The price is to come back, taking out the liquidity here, also mitigating the orders here before we see the big shoot to the upside. So below this order block here, below these equal lows, there is this thing. This is the secret, by the way. You can see that there is this order block here. There is this order block, this one. Let me try to make this this thing visible. Make it visible. All right. So now there is this order block here that we see somewhere here. So this is the order block here before we see this big push to the upside. And then this order block, it was the reason why the price has to break the structure. The price broke the structure somewhere here. I want to show you this secret. All right. So the price broke the structure here. So this order block, it was the reason why the price has to break what? The structure to the upside. So this order block is valid, this one, because it broke the structure to the upside, showing us the sign of strength. The sign of what? Of strength, somewhere here. I used to call this one a sign of strength. If the price broke the structure, I mean to the upside. It broke the structure to the upside, leaving the order block below here, down here. So now it consolidated like this, creating equal lows here, and then it finally shot to the upside. Now the price has to come back, taking out liquidity here. If you can go there, this is order block, this one. Never forget that. If you can quickly go there, you can see that even these equal lows, there is order block below these equal lows. So now the price is to push to the downside, tapping into the 50% of this order block before going back up. Because we see that the overall structure is bullish. The overall structure is what? Is bullish. So after the price has tapped into this order block, the price is only coming back down here to collect the liquidity and also to do what? It's coming down for two reasons. It's coming down to collect, to grab liquidity, and also to close their sell orders or to mitigate their sell orders before we see a big push to the upside. Before we see the big push to the upside like this. So this thing is very powerful. So the price will come down, grabbing liquidity and then mitigate their sell orders. So this is what is going to happen. This is what I'm expecting according to gold. And then that order block that you saw there, that this order block is very valid. This one is valid. So now it is valid and also strong. It met all the requirements. The first category, there are 5 categories that I'm using to determine whether the order block is strong or not. The first one is this one. The first one, number 1, is what? The strong impulse. The strong impulse. If there's a strong impulse. Number 2 is what? The market structure. The market structure, meaning you must check the structure. If the structure is bullish, and then the order block is telling you to buy, and then the structure is also bullish. So that's validate your order block. That order block is very strong. If the order block is telling you to buy, and also the structure is bullish, then you must trust that order block. So now number 3 is what? Number 1, strong impulse to the upside after the order block. Number 2, what you must check. But the first thing that you must check is market structure and then the strong impulse. Sorry about that. Then number 3 is what? The order block, it must engulf. It must engulf. Number 4, you must check what? There must be what? There must be a break of structure. BOS, which is boss, a break of structure. Number 5, what you must do now, or number 5, you must check if there is a liquidity above, liquidity above or below. If there is liquidity above or below the order block. These are 5 categories that makes an order block to be valid and strong. So these 5 categories, they validate an order block. So now, if you can quickly go there on this order block and see if these all categories are met or not. So let's check here. This order block, the white big candlestick, it engulfs this one. So the first category is met, it engulfing this one. Number 2, there must be a breakout structure. The breakout structure is here. Number 3, the structure must be bullish in order for you to buy here, to respect the buying order block. If this order block is telling you to buy, then the structure is also bullish. If that order block is valid. There must be a liquidity above or below an order block. So the liquidities must be above for this order block, because this one tells us to buy this order block. Number 5. What is number 5? Let me check number 5. There must be a strong impulse. Strong impulse after an order block has formed. There must be a strong impulse. This is a strong impulse after an order block. This is a strong impulse after an order block. So these 5 rules are all met. These 5 rules are all met. So now I already know that on gold daily chart, I have to buy gold when it reaches this point of interest. When it reaches this point of interest. So I'll go ahead and place my entry like this. So someone will ask me about the take profit. So guys, this one is a long trade. It's a long trade. So what you must do, you don't just blindly buy just because there is an order block here. You must go down just because here you are on the because here we are looking at daily time frame, must go down to hourly time frame and also 15-minute time frame, even 5 minutes if it's necessary. If you are trading with smaller capital, or if you are trading with more small account, you must go down even to 1 minute or 5 minutes. But for me, 15 minutes is my last time frame, down time frame. So now I will buy if the price comes back here. So let me tell you this, gold, it always does this thing. So gold, it always do this. It will show some weeks. The weeks will go below, will shoot below, will go until below the order block. But for an order block to be valid, the bodies must be inside. The bodies of the candlestick must close inside an order block zone. They must not be outside, the bodies. Only the wicks that are allowed to be outside. So you must not just place limit orders and stop loss here. The market will take you out, will kick you out. Not that you are wrong, but gold is too volatile. It will always show you these strong wicks, these long wicks. But the bodies of the candlesticks must close inside an order block for an order block to remain valid. So never ever place your limit orders on gold and also NAS 100. You must wait for the price. You must wait and see what is the price does when it reaches your point of interest. And then you must go down to smaller time frames. Let me go down to 1 hour time frame and see what is happening and show you what is going to happen. It will do either 2 things. One of these 2 things that I'm going to talk about here. All right, so if gold reaches this zone, somewhere there, maybe gold is what is distributing. Maybe gold is doing what is distributing. Let's quickly check. Maybe gold is distributing, is currently distributing. As you can see somewhere here, the price came back to tap into this order block here. As you can see it, this one according to 1 hour time frame. I took this entry this week. It came back here, tapping into this inside this order block, show to the downside like this. So it's trying to go back there, as you can see it. Now, is the price distributing here? This can be our distribution, this one. Let me try to mark it up. Let me try to mark it up. Here I see the terminal supply here, which is PSY. The PSY up there. I also see buying climax somewhere here. I see buying climax. After buying climax, I see secondary test somewhere here. I see secondary test. After secondary test, I see what? I forgot to label the AR here. I see automatic reaction there. Then I also see the sign of weakness somewhere here. The sign of weakness. Sorry about that. I see the sign of weakness here. I also see the U-TET here. There's a U-TET here. I mean the upthrust UT. Sorry. There's a UT up there, which is taking this one out. There was a sign of weakness once again, somewhere here, sign of weakness. As you can see it, then above there is also another order block. According to hourly time frame. All right. So this is it for gold. So the price is currently showing us a distribution. So it might push the downside to the upside, creating the U-TET. If not, it will just come above here. Above here. And then respect this other block before pushing. Respect this other block before pushing to the downside. Or just break above, creating what? A U-TET. Creating a U-TET. So I'm waiting for two scenarios. I'm waiting for two scenarios. Let me delete this one. Okay, all right. So now the price might come back here, up here to create the U-TET after distribution, because it created a preliminary supply, buying climax, automatic run reaction, secondary test, sign of weakness, upthrust. After upthrust, we created sign of weakness once again, and then we created this liquidity, and now we're waiting for what? The U-TET, if there is a U-TET. Maybe the price would just tap into this other block here and then push to the downside, or maybe you could go above and create what? The U-TET. So this is what I'm looking for on the hourly time frame. This is what I'm looking for on hourly time frame. On the hourly time frame. So now the price still has to come here, according to this other block, this one. So the price might go like this. like this. Then you see the move to the downside. Why I'm analyzing gold like this? Because remember, on daily time frame, we saw what? We saw the liquidity to the downside. So the price is currently distributing to go and collect or grab that liquidity and also mitigate the sell orders down there. That is why the price has to start by distributing to gain some powers in order for it to go there and grab that liquidity before we see the big move to the upside, because the overall trend is to the upside. Never ever forget that. So that is why the price has to distribute here. It is now distributing to go down and collect those orders, collect those liquidity there, and also close their sell orders. So that is what I'm currently looking at. Good people. So now this is it for gold. Let's wait for Monday. For sure now the market has closed. The market has closed. So now we're waiting for Monday. What is going to happen there? And the other thing that I want you to see here is this. There was this order block here, which was not tested. This one. This order block. So on Monday, when the market opened, it may shoot to the downside like this before shooting up. We're waiting for anything. Anything can happen on Monday, because some people bought here. Some people were buying here because of this order block. But we had this order block and also this one. We had this one and this one. So there were two order blocks. So the price, it can jump straight here before shooting to the upside like this. That is why it's not right to remain in the trade during the weekend. But it is not wrong, like if you're a long-term trader. Just that if you are taking trade in the wrong areas, that is the problem. You must make sure that you are taking the trade at the beginning of the trend. Do not take any trade in the middle of the trend and expect to hold it for long term. If you are taking it in the middle of the trend, you must be scalping. You get in, then after 4 hours or 5 hours, you get out, because you took the trade in the middle of the trend. It is better to take the trade where the trend is starting at. So now this is what we are seeing on gold. This might happen on Monday. Then gold has to push the upside, tapping into this order block. Then we see the big push to the downside. So this video will be uploaded on my YouTube channel. You will find it tomorrow. All right, so that is it about gold, guys. So thank you so much. Thank you so much. Remember, I told you that I have to go and analyze Euro USD and see what is happening according to Euro USD there. So let's quickly check what is happening. Okay, this is Euro USD, hourly time frame. You can see with here there's this sort of block here, this liquidity. Let me try to mark up the liquidity from this point up until this point, according to a retail trend line. All right, so you can see, guys, that this is always happening. This thing is always happening in the market. Even here, they drew this trend line like this, a trend line like this. You can see that this is liquidity once again. So you will see that the market will come above that trend line. Will go above that trend line to manipulate the retail traders. So there's liquidity here. The market, it went above, taking out this high. Taking out this high, and then it went back down. Now it's going to come back here, taking out this equal lows. The liquidity that is here, according to retail trade. Let's go back. Let's go there on weekly time frame and see if we are trading to the upside or downside. Very important. You must start your analysis on weekly time frame or monthly time frame. But most of the time, I don't spend much time on monthly time frame. All right, so we see that now Euro USD is trading to the upside. It is now trying to create what? The new higher high. Let me show you this. Before I say wrong things. You can see that Euro USD is actually trending to the downside right now. It was trending to the downside. Maybe somewhere here there was a manipulation. There was a manipulation. Let me show you something here. There was Wyckoff schematic, accumulation somewhere here. Let me mark up. Let me show it up according to the box. According to this box. All right. This was Wyckoff schematic accumulation. So I can go ahead and mark up this thing and show you this thing. Here there was this criminal support. Somewhere here there was this criminal support. PS. Not like this. PS. Yeah, and then we have what? We have selling climax. Let me get rid of this box. We have selling climax. Get rid of this box. And then we have what? We have automatic rally. Somewhere here, we have automatic rally. And then we have what? We have secondary test in phase A. Then you have what? Sign of strength. Okay, we have sign of strength. Sign of strength. And then we have what? Then we have what? We have the somewhere here, you're supposed to have the secondary test in phase B. Secondary test in phase B. This one here. And then here we had our spring final push to the downside, taking all the liquidity there. The spring that has taken all the liquidity. So then look at this thing. Now here I will refer this one to the failed sign of weakness. This one was a creek. I refer this one as a creek. So this one was a creek. So this one is a creek. I have to put this thing apart. On top. All right. So after this thing now, what I'm waiting for, as you can see, the price created the primary support. After primary support, created selling climax, automatic rally, secondary test, sign of strength, secondary test in phase B, and then we created the creek here. It failed to create the sign of strength. It created the creek here, and then after the creek, it created what? The spring, taking all these lows. Now it's short to the upside. You can see that the price was even jumping, going up like this. It was jumping. You see, so most of the time I used to pull my Fibonacci. I used to pull out my Fibonacci and expect the price to come there. I used to pull my Fibonacci from this low. Most of the time, I'm not saying it always works, but most of the time I used to pull it like this and then try to there's my trend line here, and then I'll get rid to this Fibonacci. And I'm taking only 50% of this whole schematic, Wyckoff schematic. So now you see what is happening. You see what is happening? The price came here, tap into this 50%, even though it went below, but most of the time it will tap into the 50% and try to go back up. But now you can see that somewhere here there was an order block. That is why if you don't see any order blocks, you must try to mark up the 50% of the whole schematic. If you don't see any order blocks, you see that the price, it was jumping somewhere here. The price, it came here to close this gap. The price was jumping around these zones. The price was jumping. So it came there to tap, to close the gap and also respect the last down candlestick before the up move. This last down candlestick before the up move, you can see. This was the last down candlestick before we see the jump in the price, before we see the strong push to the upside. So remember our 5 categories. The candlestick, the white candlestick must engulf the black ones. They must engulf the black candlesticks. Number 2, there must be a strong impulse to the upside. There must be a break of structure. Number 3, which you see up here. This is a break of structure somewhere here. There was a break of structure somewhere here. There was a break of structure somewhere here. Number 4, you must check the market structure. If the market is traded to the upside, then you must trust this order block. Then number 5, what is number 5? The strong impulse, number 1. Number 2, the market structure. Number 3, break of structure. Number 5, it engulfs. And then number 5, it must have taken the liquidity. It must have taken what? The liquidity. even though this one is not clear, but someone was buying here and also here. Someone was buying here and here. So the price came back down to take the liquidity here. This liquidity and also to mitigate these sell orders here before we see the big move to the upside once again. So now we are still here. We're still here. And this move, it has to move above this one. Let me show you. It has to move above this one. So what I will do most of the time, I'll go ahead and label this one as our higher high. This one is our higher low. Higher low. To show that the structure is bullish. Higher low. And then this one, higher high. This is what I'm seeing right now. So, and then next time you want to see what we want to see. We want to see the higher high once again. This is how you analyze the chart, especially on higher time frame, as you see. I'm on weekly time frame. You see? Now this one is what? The spring, I regard it as well as our higher low. So this one is higher low, higher high, higher low. Well, we are only remaining with this new higher high now. So the price is to push the upside. So now we are looking for buys. Let's see what is happening here. Let me try to get rid of this. You can see what happened here. There was this order block that I see here. There was this order block according to weekly time frame. Try to zoom in. All right, so you can see, you can clearly see that there's another block somewhere here. There's another block that is here. This last down candlestick before the up move. So the price, it came back down here, but it didn't tap into this other block, but it chose to close the imbalance only here. This imbalance, now we see that the USD is trying to go to the upside. Because here, if you can look closely into this minor structure, you will see that it created what? It created this higher low, higher high, higher low, higher high, higher low, higher high, higher low, because it didn't break this higher low. Now it now failed to create the new higher high. Now we can still expect the push to the downside, tapping into this other block, and then the push to the upside, creating the new higher high somewhere here. So this is what we are expecting according to USD weekly time frame. So we're expecting all these things to occur according to weekly time frame. So let's quickly go to daily time frame and see what is happening. Let me try to leave this one alone. Now we're waiting for the new higher high according to this minor structure. But this one is just the one strong impulse if you can go to monthly time frame. Now let's quickly look into the daily time frame and see what is happening according to the daily time frame. Now this is what is happening according to daily time frame. As you can see that there was this order block according to weekly time frame. So daily time frame, it might come back here to this weekly order block. It might come back here to this zone, to this order block here, to this order block. It might come back there. As you can see, it is there. This last down candlestick before the up move. And because this order block, it was the cause of the break of structure. It was the reason why the price broke the structure. Yeah. It's because of this last down step before the push to the upside. So the price still has to come back here before we see the big push to the upside. Before we see the big push to the upside, creating this higher high. Remember that we marked up on the weekly time frame. So this is what I'm expecting. Let me go down to 4-hour time frame and see what is happening according to the order plan. What is the price doing here? And also you must check the divergence if you can. Very important. As you can see here, according to our divergence, the price is doing what? Is creating what? Is creating higher highs, and the trend is our indicator is creating what? This is the divergence. So showing up, it shows up that the price, it wants to go low. To do what? To collect all this liquidity here and also close the sell orders here or mitigate the sell orders here, their orders. They want to, there will be a mitigation here, and also the liquidity will be taken here. It will grab the liquidity, because if you can look closely in this thing, if you look close on this thing, you will see that there is a trend line here for retail traders. There is this trend line. Here, there is this trend line, which has liquidity. So the price, the market makers will push the price coming back here, creating another liquidity like this. Sorry about that. Move like this, creating a double bottom, going back up, going back down to mitigate orders, going back up like this, leaving an order block here, some order block here, or somewhere here, or somewhere here. And then you see there was a break of structure to the upside. This move will pull back to these order blocks here before we see the big move to the upside up until this new higher high. This is what is going to happen according to your USD 4-hour time frame. So I'm done with this one. Yeah, let me try to see what is happening according to another pair. Let me check another pair, what is happening there. But on this one, let me try to take a picture of this one. You see this order block below here, this one. So yeah, so the price is currently creating liquidity here, according to these retail trend lines. So there's liquidity here, the price will go down like this, tapping into this order block before we see the big push to the upside. So that is what I'm expecting according to the daily time, Euro USD. So this is what is going to happen according to USD 2-hour time frame. I'm expecting this to happen. This must happen on Euro USD. So we have to buy Euro USD somewhere here. Let me try to save the picture. Go back to the chart. So that's all, guys, for this now. So I think I'm done. Maybe I can go and touch on the USD zone. Maybe there's something there. I'm not sure. On USD zone. You can see that USD is trying to push lower to mitigate all these orders. But here, taking into account that here there's also an equal lows. Somewhere here, there's an equal lows, and then underneath there's an order block. So this order block might not hold this one. It might not hold the price. I'm expecting this one to hold the price, this order block. It might hold the price. So this is it for USD ZAR. I'm expecting this to okay for the USD ZAR. Now the price is coming back in the form of lower high, lower low, lower high, lower high, until it finally tap into this order block. So then correct this liquidity, and then we'll see the big move to the upside. So thank you very much, guys, for your time. Thank you. I hope you enjoy your weekend. Let's wait for Monday and see what the market has for us. Thank you so much. Bye-bye, guys. Enjoy your weekend. I'll see you on Monday. Go and check the video on YouTube. Please like and subscribe. Thank you so much. Subscribe on my YouTube channel. Like and share to everyone. Be close to. Invite them to subscribe in my YouTube channel. So that I'll keep on posting videos like this. Thank you so much. Enjoy your weekend. I'll see you on Monday. Peace.